Are back for the fourth video in the moving average section. So far we have covered using the MAs for trend direction, the overall bias, looking at the monthly, weekly and daily timeframes. We have then covered the closures above and below the moving averages, more so the 80 EMA, the blue EMA. And what I'm going to go into now is just another short method of, well, there's two ways we can do this. We can use this method to establish where the market is going to go next, more so on the monthly and the weekly time frame. I'm also going to go deep into this method on how to use it in regards to actually basing entries from the moving average once again. So we've covered the break above and below, standard breakout, and we've also gone into using the moving average as a dynamic area of support and resistance. So I'm going to take you through this next one. It isn't as I would say it's a little bit more rare to spot on the chart and to find than the breakers above and below the MAs. However, let me go through it. Let me show you a few examples of how this works. So firstly, I'm just going to show you the Aussie dollar chart at the moment because it's now Saturday, by the way. I did the other videos yesterday, Friday, later on the Friday. I just want to pop in there as well from you guys looking at the first video when I went over the Euro USD. We had the Friday closure and we actually hit 1.1925 on Friday night. We've actually made that new high now. I was mentioning that we should only be looking for long opportunities on the Euro due to the moving averages being up on the weekly, being up on the daily. And as you can see there, we had various levels of support, i.e. one here and one here, in which we were above. And then this level right here, this spike, priced in a new higher low in comparison to the previous higher high we had over here as well. So we've actually made that new high now, and the timing for that was around, I think it was around 9:30 p.m., 30 minutes before the actual market close. So let's look at that on the weekly candle. We've actually engulfed 1, 2, 3 previous weeks there as well. So I'm actually expecting the Euro to maybe continue the upside momentum and movement going forward. And yeah, that is looking like a pretty strong follow through candle. 1.2 I believe is next on that one, but as you can see the MAs are up as well. So examples, if we just go back over to the Aussie, if we look at, let's move this out of the way for a moment, the last few weeks. So that was yesterday's closure. This was the prior week close over here, which is more or less a perfect example as to what this video is all about. What we've seen is the market actually opened, and similar to the Euro, if I just mark on, that was the most recent high in this overall bullish construct, and it's multi-month highs as well. If you look at this, we broke out with that region, as did the Euro. The moving averages crossed over, it guided the price and so on. Very, very choppy around here, but it still acted as support at that time in particular. We made new highs and we pulled back. So this is what you're going to see a good few times over. So the other two videos are more or less a break and close above and below, breakout, if you will, and this is a rebound. So we're looking for the market to actually rebound from the moving averages. So doing the weekly analysis going forward, what we can jot down for the Aussie is that we pull back into the dynamic area of support, the 8 EMA. We spiked through it and then closed back above. What we're looking for are mainly more so spikes through the moving averages. 80% of the time you're going to see it spike through the 8 EMA, the blue one. Sometimes you may see the spike follow straight through in between, and the body may even close in between as well. So more or less you can get this candle a little bit further down. This candle can also, this spike in particular, could even poke through the 18 EMA, but the majority of the time you are going to see it come off the 8 EMA. What this tells me is the market pulled back. We had one spike before, but we didn't actually reach the MA on this one. The week after that, we spiked straight through it and we closed above the top right-hand corner of the body, closed right on that key level of resistance. And then last week we spiked down again, just missed it shyly. But again, this 1, 2, 3, we have this 3-pin pattern over here as well. Because we spiked through the support level, which is the 8 EMA, I'm now expecting a rebound to the upside, which is this. So I can jot down Aussie dollar, even the closure of last week, at the end of this week, let's say I did the analysis on the Monday, Aussie dollar looking to go higher after spiking through the 80 MA, and we can now maybe go into lower time frames to see where we can find an actual entry. So if I combine that analysis with what I went through on the previous video, and what we're looking for, let's move this out of the way. What I'm actually looking for is, well, we actually got that yesterday, 3-pin formation 1, 2, 3, but the body is now closed above and beyond the moving averages. If I remove them out of the way, as you can see, the MAs are still up and the body's closed above. So that's a buy trade on itself. This wave here from the bottom to the top, maybe I did cover this briefly as well. We can add a small fib in there too as a confluence, and we have pinned right on the 61.8. I'm looking at Aussie going higher, so I've took the spike through the MA as a rejection on the weekly, and that's what it looks like on the smaller time frame right there. And now I'm looking at this continuing higher. Going into further examples, I can go into, let's have a look at, okay, so a good example on this GBP JPY chart would be here. So we have spike through, spike through. So as what differentiates from the previous information on the last video was that this is the break and close below the MA. It's got the cross and it's also broken below the support. So it's a breakout. We can jump onto this new trend. This in particular is a rebound, a rejection. So we have a spike through and close below, spike through and close below. So what it's more or less done 2 days here, it's spiked through once, twice, created a tweezer top formation as well, and then the market's rebounded. If we can go into further detail, even just back here, what we're looking for, what's the most important concept to bear in mind is the spike that pulls back to the MA. So candle opens, it spikes back to it, retests it here because we broke above it. This one candle, we broke above the blue A, well, we did here, but this was a full, more of a full candle with more momentum behind it because there's the wick on the top on the closure. Price is relatively smaller than this one, but that's still good because you can see here and here we didn't actually close above the moving average. So boom, and then we get the follow through right here. The next candle opens, we pull back to that, leaves a wick behind. So what we're looking for primarily is the wick to be left behind, spiking through the MAs and so on. Daily time frame, we can't really see too much over here. As you can see, none of these candles or wicks came relative, well, apart from this one, this came more or less to the support. That's what the 140 was holding up right there, but we didn't actually spike straight through the moving averages. Coming back into history, just over here. Here's a great example. So markets up and above after this small area of consolidation right here. There, markets above the MAs, breaks out, crossover. Then this candle right here spikes all the way through and then back above. So that is a huge rejection. Even after this candle in particular here, same rules and same methodology as to what I went through on the previous 2 videos. We're buying after that candle in this case, and your stop is going 15 to 30 pips on the opposite end. So you line it up, see what price the wick is at in this case, and then put the stop behind that, take it to the next level. Also, what we can find is not just spikes through the MAs, but candlestick reversals on the MAs. So here, bullish engulfing. So we come back in and then whip back up. That's a bullish engulfing move. We also have one here as well. This is more of a morning star at support because remember this is support. So you can find candlestick formation. So this is a trend continuation, trend continuation, trend continuation. Looking over here, when we break that below the moving average and here as well, that's it could be considered as a trend reversal at times, but I just like to consider it as a standard breakout of that key level. So that's the daily. At the moment, I'm watching price action around here because yesterday, Friday's closure, we came up, we spike into that now. It's going to be interesting to see what happens next. So going into the 4-hour time frame, I can show you a few more examples. So going down into the 4-hour, we're going to see so many more pieces of price action and indications that not only spike through the 80 EMA, but also rebound off the 18 EMA as well, like this one here. So market pulls back, and what we can see is spike through, closure back below. Here again, spike through and spike to, closure back below. So these are lower swing highs, lower swing high, lower swing high, into new lows there as well. If we look at this over here, Markets, the moving average have actually crossed over, but this candle in particular, it's opened. It spiked to the ATMA and rebounded. So after that candlestick there in particular, would have got a decent risk reward trade off that, and even this one as well. Stops below, we can see that the more or less it's a, we could say this is a change in trend direction, but that's a spike there. Buy, stop below. Going back, we can consider this move here, rebounded into the moving averages, boom, straight back below, bearish engulf, moving gulf 1, 2, 3, 4 candlesticks. Short here, stops again, 15 to 30 pips on the opposite side, down to your next key level of support. Covered this one briefly in another video. This could maybe even go in this one. We've come up again, tweezer top formation, close back below. So we've just come in to test this, because remember, in between the MAs, that is also considered a dynamic area of resistance. So we've come into the resistance, rejected it, closed back below. And again, it really, really helps to stretch your charts out, be patient, and know where to go short, in this case here, after rebound, and where to place stops. Formation high, 15 to 30 pips above, my preference is 25. Looking over here, what we can see is, again, we have to get quite intimate, if you will, with the chart. We can see break and close below. So this was a huge break and close below the MAs. Markets pull back, spike straight through resistance at 145, this region here, and also spike through the blue moving average. Then we got the follow through. Price consolidates, spike through again, consolidates, spikes through again right there as well. So we want to be taking into consideration the wick spikes through the MAs. We want to be taking into consideration how that candle forms as well. And again, it's just riding the overall trend, a great way to jump on. So if I just do a few examples here of risk reward and how we would lay out risk reward for these various examples. All right, so let's have a look at this first one. Now, we spiked above. If you were not really a conservative guy, then you could enter off the closure of this candle here, because it spiked up. Your stop would have to go beyond here. So if we did that, we can see the spike, we can see the rejection. We line it up with that there. Right, so the stop, the high of the candle wick is 27. Our stop, if we use 25 pips above, is going to be 52. So 52, that'll do that. And then we can take it down to our next target. Again, top-down analysis, guys, looking at the overall bigger picture and time frame. Target 1 could maybe be there. So risk reward of 1 to 1.4. We're risking 64 pips for a target of 90 pips. And then obviously, if you wanted to go lower, you could go ahead and do that, if your key levels make sense and so forth. Next opportunity would have been this here. So we spiked in, spiked through, closed back below. The closure of the shooting star candle is right here. The highs of that candlestick there is 144.72, say, to round it up. So 25 pips plus 72, we're going to go to 97s. And again, we're just going to be dragging it down. But I also mentioned on a previous video, these moving averages, especially the ATMA, can really assist us with trade management, allowing us to try to milk the trade for as much as possible, as long as price trades below it. Okay, so that's that one there. Next one, if I zoom right in for this one, because it's smaller, but I can tell this one's going to be a really, really good risk reward. Okay, so this one here, we spike through and we close back below. So closure there, again, you have to be pretty on point for this one. This is a 4-hour time frame, remember. The high is 144.47. So we're going to 72s as an overall stop loss there, give it some breathing room. And once again, taking it down to, it's already laid on 142. So risk reward of 1 to 4.6. 40 pips stop for 183 pip target. 183 pip target. Now, we have this example right here. Check this out. This example, the market's pulled back. It's similar to this one. It spiked through it perfectly and so on. Now, generally speaking, we would enter at the base of this candle low right here. Stops would be 15 to 30 pips above. So let's say 25 above 34. We're looking at 143.60 there, which is decent. We can take it down to the next low. However, You would have nearly got stopped out. It made just under equal highs right here. But we have to consider what's below us. Look at the support right there. It doesn't really make sense, especially here as we've tapped it 2 times over, more or less. It doesn't really make sense for us to go short right at support, right? So just bear that in mind. Always combine it with the top-down analysis, where the overall market direction is going. That's why the focus of the previous videos has always been, again, with the key levels. Let's drill down and consolidate our skills into these charts in order to see where the market's going next, rather than always finding the entries. The entries come afterwards. Look at the grand scheme of things, monthly, weekly, daily. Look at how far the market has to run, if it does have any room to run, but also consider the key levels of support and resistance. This right here, we have this bearish engulfing, so we've dipped through. It's not really a spike as of these other ones, but we've dipped through, and the rejection point would have been... So we go short at this closure of the bearish engulfing. The highs there are 143.34. So we're looking at 143.60. Okay. And then we're taking it down to whatever key level suits. Okay. So again, you're looking at the formation, ensuring that we're zoomed into the chart to get that precise calling. Over here, we break through. That was the previous videos, but now this is the retest. So we have the highs. This is the formation bearish engulfing 1, 2. We've engulfed 1, 2, 3, 4. Let's say 142. So 25 pips above 142.25, and then we're again taking it down to the new lows. Over here, guys, 1, 2, 3, 3-pin formation. This time it's off the 18 EMA. Your entry would have been at the bottom right base of the closure of this candle here on the 4-hour. Stop at the formation high plus 25 pips. We're looking at 140, 130 because the high of this candle is 140. Let's just say 141. Boom, and then here as well. Upside example on this GBP JPY at the moment. GJ. So we break through. Again, we have the breaker right here. That's a breaker as well. You can consider any of these a breaker because it's come back above blue EMA off this area of support, because GJ is well overextended. And if we just take a quick look at how the week formed and closed, that's the weekly candle on GJ. Look at this. So we could pull back before going long. GJ can go long now. So a bigger picture, always looking at that. All right, so breaker here, breaker here. That was in the last video, but this one we spiked to the MA. Entry would be the top right hand closure. The low of the candle is 140. Let's just say 140.20. So we're looking at 139.95 as a stop, and then we could even take it to this key level here, which is still a risk reward of 1 to 1.7, 50 pip stop for an 88 pip target. Let's move on to gold. Gold been a little bit insane the last few days. We had some major points of consolidation on a couple of these time frames. Right there. And yesterday, gold out of nowhere just popped all the way down, but it respected 1275 again. All the gold key levels are in the members area for you guys to plot onto the charts when you want to. Other than that, we had MAs are up. Let's start with a weekly. Right, weekly time frame, MAs are up. A great piece over here, if you will. Look at these candles, whipping down. This whole entire region for gold has been relatively major recently, as you can see. Major. Come into the region. What we've seen over here was a huge breaker candle above the MAs and also above the resistance, which is now support right there. Now look at what we can see on this weekly time frame. We spiked below. We spiked through 1250. We've also spiked through the 2 moving averages. Markets consolidated pullback, but the MAs are guiding gold as support. Here we've opened, we've spiked through. This is another example of We got 2 spikes through the 18 EMA there, but look at this, boom, forced back up. Next week, indecisive, we hit 1300 finally, and we came down, but again, the MAs are still guiding us, and they are for the week ahead as well. So let's just say MAs started to continue to the upside, guiding gold. Okay, and then we spiked down again. Look at that, 1275. So we got the supports. It's all about the support and resistance using the MAs alongside the key levels to grasp where the market's going to go next and where's it going to flow to. Over here as well, nice spike there. We didn't get follow through because gold, ultimately on the bigger picture, it is in consolidation between 2 major points. So again, we have to keep an eye on the major levels on gold. That's why we do the major levels first. Gold for me, with this being said, we can maybe spike out of 1300 zone now and go beyond. If we do break above 1300, as mentioned in the key level section, the rules are 1325. The weekly level is going to be next. Coming down into the daily, where it can get a little bit more interesting. All right, so coming down into the daily for gold, some interesting price action thus far. Now, let's just talk about the recent before I go into the earlier half of the year, well, last year. What we can see now, we've established the overall trend on the monthly and the weekly are up. What's been happening is yesterday, this is a prime example of getting ready for next week now, even to go long. We combine weekly, you can see there, we've tested the support, 1275. We've also made lows there too. Going into the daily time frame, we spiked straight through both moving averages and support. So as you can see, and this has also engulfed 1, 2, nearly 3, nearly 4 days of price action. This can tell us that we are potentially looking for a fucking huge spike out of 1300 and beyond. With that being said, over here we have a beautiful bullish engulfing right into the middle of the region of the moving averages there as well. That's a great setup in particular. Over here, we have a pullback into the region. Remember, in between the moving averages is support 2, 1, 2, 3, 4. We spike through, close back above, and then there's the breaker as well. That's the breaker there too. But even here, because we spiked through the 18 MA and then close back above it, we could even maybe have considered that a potential bullish opportunity signal long. Over here, we've consolidated, spiked straight through the blue moving average, and we closed above. Over here nearly, and we have a brilliant breaker right here. As you can see, spike down into that region of support, come back up. We didn't close here above the MA. And then boom, straight back above. Over here, if you look at, there's a reversal 1 and 2, pull back into the moving averages, bearish engulfing 1, 2, nearly a tweet at the top there as well. Then we have a spike again, spike again, spike again, spike again before the market actually falls. So again, we also have 1250 there as well, guys. So that's the resistance at the time. Spike through res, rejection, rejection, rejection. Here we hit the 80 MA, here we hit the 18, then we hit the 18 once more there. Coming into this zone, we spike straight through, hit 1275 as resistance, come through there, spike through, spike 2, spike 2, spike 2 and through, spike 2 and through, rejection, upside, 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 upside. And then over here as well, beautifully, well, 2 brilliant rejections here, spike through, rest above, right into the region, nearly at the 18, and so on. And then look at the price, rebounded, skyrocketed, and so on. Let's have a look at some 4-hour price action on gold. 4-hour, been pretty hard to read, to be honest. Okay, so 4-hourly, again, it does guide the trend ultimately. We have no spikes to the 80 MA there, but we have a nice clear breaker right there. Here we've utilized the in-between of the moving averages as support. Over here, spike through, and then we have spike through and then a breaker back above, spike through the MAs and a rebound there once more. I'm kind of finding it pretty difficult to find decent setups on gold apart from these small ones, spike through, spike through, spike through. Breaker below, spike back through. So we've broken EMA support, tested resistance, carried on, and so on. So I hope you guys get the picture so far. I'm going to be covering some of this in the webinars, and I'm going to be doing more videos on constructing, bringing everything together, if you will. So we've gone through the trend filtration, video number 1, trading the break above MAs, trading the break below MAs, and looking for wick rejection. So it's always going to be the tail, and alongside the wick rejections, we can also throw in our candlestick formations and reversals directly from the moving averages in itself. So see how gold performs for the rest of the week. I would have already finalized the other 2 videos by then, but you know, I can go over this on Monday's webinar also for everybody. Quick one, can we see anything else over here? Yeah, Euro USD, you may find, just keep in mind, you can see the market push up, then consolidate, because when it gets too far away from the moving averages, it pulls back. It's like a magnet. Here, this is beautiful. Spike 2, open, spike 2, and then beyond. Here we just missed it. We just missed it, and euros continue to the upside. Weekly is a bit of a nightmare. Now, if we look at here, this is beautiful as well. We've come back in, we've spiked below, we have 1, 2, 3 pin. That also confirms a higher low on the euro. Consolidation, 3 pin again, 1, 2, 3, a new higher low into higher highs. Here we've opened, we spiked below, closed above, consolidate, spike to the MA, back above. Here it's a big, huge mess at the moment. Euro didn't really know what it wanted to do, and then Friday we actually made the new highs. Very, very happy with that analysis, to be honest. Been looking at that for a while. Here we come back into the MA's supportive zone, 1, 2, 3 pin, and we have the breaker back above as well. So just take it easy. Don't try to combine everything at once. I recommend you just start with the breakers for now, and maybe keep an eye and again, write things down. Do your annotations onto the charts when you do see these spikes to go forward. Anything back here? Yeah, this was the election, spikes all the way above, breaker back below, prices just melted below the MAs there, and so forth. So guys, have a play around. Remember to be vigilant and watch out to see which key levels are above and below. We don't want to be selling on support and buying on resistance. Ensure that you are doing your top-down analysis and practice. And again, great entry strategy with minimal risk and always a decent reward. So I hope you enjoyed this video. On to the next.